hat Emmanuel auch angeboten, mit uns heute ein Gebet zu sprechen. Vielleicht können wir dazu kurz aufstehen.
Glory be to the Father, and the Son, and the Holy Spirit. Christ our God, we ask, pray, and entreat that you incline your ear to the voice of your servants, that you bless all those gathered here today at this important meeting. We ask that you bless their businesses, their investments, so that they in turn will glorify you and the kingdom of heaven. For you are holy always, now and forever, and to the ages of ages. Amen. Zuerst, es war für mir eine Ehre, die Einladung zu erhalten, hierher zu kommen, heute mit Ihnen über das wichtige Thema einer christlichen Philosophie, Investitionen zu sprechen. Vielen Dank. If you don't mind, we'll continue in English. It's been 20 years. I don't want to mix my German with Greek. So, if you think at any point there's going to be death by boredom, if we talk too much about this topic, we can switch to stocks in the portfolio. I'm just as happy to do that. So, why am I here today? And you're probably asking, why are you here today? You're probably thinking, it's just another priest running a hedge fund. And I get that all the time, right? People come to me and they say, but Father, you know, how could you do this? How could you run a hedge fund and be a priest at the same time? And what is that really saying? Is it saying finance is dirty? Is it saying that it can be, sure, but any part of life can be that's human and subject to human frailty? But people look at this as extraordinary blurring of lines, if you will. But let me tell you how it all happened. So, as a young man growing up in the Seattle area, at the time there was the highest concentration of millionaires per capita in the world at that time. And that was because most of the people living in the greater Seattle area had stock options and this incredibly fertile environment that gave rise to Boeing and Microsoft and Amazon and Starbucks and a host of other technology companies, especially during the dot-com boom. And as a young man, I was watching this, and I saw my parents working quite hard, and they really weren't making the progress that my friends' parents were. I mean, pretty soon they were buying homes on the French Riviera and things like this, and they weren't really working very hard. I thought, well, geez, you know, they're not working as hard as my parents, or I was working as hard as, by the way, at the same time. So I was working very hard. I thought, whoa, you know, you don't own a home on the French Riviera. And then I began to think about the difference between a wage earner and somebody that owns a productive asset. And I took a great interest in the stock market. But it was around that time, the same time, I realized God was really calling me to serve him as a priest. And I let go sort of those ideas about public markets and investing, and I pursued theology for the next 9 years in the university. And it was really, it was quite providence, actually, because prior to that I had lived in Tübingen, as it was just pointed out. And unbeknownst to me at that time in high school, I was at Geschwister Schulschule in Tübingen. I didn't even realize it was a center of theology. I wasn't exactly the church-going type as a young man. It was the last thing on my mind, frankly. But as the years went by and I graduated from the seminary and I went on to build companies as this sort of entrepreneurial streak I had seen in my parents, you know, I couldn't help really let go fully of this idea, but you know, owning productive assets is so much easier than running a business. I mean, if you had a choice, owning one is clearly better. And it was around the time of the financial crisis, 2008, 2009, and I saw, you know, it was mentioned earlier in one of the talks, I think it was Tom, you know, people were asking if checks were going to clear. I mean, it was really ubiquitous. It was a crisis. But I must have seen an interview with Buffett at some point. I mean, he just looked so calm. I mean, nothing was really bothering him. I'm like, gosh, you know, the sky's falling. How difficult could it be to do what he's doing? And in my business life, you know, I finished the seminary and I waited 8 years to get ordained, but you know, I was already looking at business like investments, but nobody had really clarified to me the sort of concepts that Graham and later Buffett would expound on, this idea of buying productive assets at a discount. But by God's grace, in the midst of the financial crisis around 2009, I just went to the bookstore and I said, well, I'll just get some books on investing. I had never heard of Ben Graham, but just the book was right there on the shelf. I pulled it out, and the front cover said something to the effect of the most important book ever written on investing, and it was by Warren Buffett. I said, great, I'll just read this. It'll be solved. And right next to it is security analysis, right? That must be important, this 600-page tome. So I grabbed these books. You know, it's Borders. By the way, they went bankrupt, of course. I buy these books at Borders. I take them home and I start reading them. And in 5 minutes, I know all of this already. I thought, wow. Now, I knew I was not the most humble guy, but how could I possibly know everything Ben Graham was talking about in 5 minutes? I mean, that's like off the charts arrogance, right? So I put it down. I didn't read it anymore. That's so disappointing. You're never going to learn anything if you lack all humility. But then a few months later, I went back and I continued reading, and I couldn't put it down. I thought, boy, I wish somebody had explained these things to me in my 20s. Because I had already been trying to do with real estate and operating companies what Graham and Buffett were doing in the public markets for common equity. And what was the difference, right? I mean, the difference was that the permutations in price in public markets were far more often. And the mistakes in price value dislocations were far more often than assets which were liquid, like real estate. So once I grasped that, I thought, wow, this is extraordinarily powerful, But how does this sort of comport with my belief in my faith? And this is around 2009, 2010. And not there long after, of course, the bishop would call and say, we want to ordain you, I mean, come on, you're getting kind of old, you're like 33, and Christ is getting crucified by this time, you haven't even started, So, I'm reading these books, I'm reading every classic of investment thought I can get my hands on, and I'm thinking, but at the time, my name was Gregory, but I took the Ecclesiastes and I said, I'll just write my ideas down and I'll publish them. And that way, because everyone on Wall Street thinks they're smarter than the market, right? I mean, it's not a business of humility. I mean, let's be honest, right? I mean, maybe it's a unique weakness of us men. We all think we're smarter than the market. Well, I'll just write my ideas out and I'll publish them online, and that way I'll be outed. It's just hubris, right? I mean, if there was any ability there, there's probably not. That way I'll be uncovered. And so I did that, and here I am, 140 essays later. I just couldn't stop writing my ideas and publishing them. And the thing is, I thought the essays were terrible, but they turned out to be correct, all of them, just about. I don't recall any that were not correct. I'm sure there will be one day. But I thought, wow, this is really super important. But what does the gospel say about this? I mean, my whole life has been given over to serving the church at that point, right? 9 years in studying theology, no background in business. And I thought, boy, people are just, it's obvious. I mean, what could this dumb priest possibly know about allocating capital? I mean, I didn't go to Harvard, didn't go to Columbia, didn't work at Goldman Sachs. I mean, nobody was going to really listen to this, right? I mean, what are the chances? But, as I was writing, and I'm talking to my bishop, and he said, what do you want to do? I'm saying, send me to the poorest church. I'll go anywhere. Where is there a need? This sort of high-minded idealism. He says, well, Emmanuel, is the church paying you? I said, well, no. He said, well, do you have kids? I said, well, yeah. At the time I had 3 children. He said, well, just keep doing what you're doing. I'm like, what did he just say? Like, you mean I can keep managing investments and do this? You can have a priest with a lay vocation. You can have a liturgical. This is great. But why aren't we doing it already? I mean, it's not like you go into your average church or your diocese or anywhere and you find really shrewd capital allocation. You turn on CNBC, and the Jewish community almost owns the message entirely, right? I mean, every commentator. I mean, whoa, what was Graham saying that was so different, not only than the gospel, but Aesop's fables for that matter? I mean, Graham was an extraordinary intellect, there's no question. But what he was saying, was it really unique? Not totally. I mean, he clarified it. He predicated those principles clearly. But they existed in public markets. They're timeless, right? They existed before Graham's time. The machinations of public markets may have changed. As was pointed out so eloquently by Tom earlier, technology's always been there, and the machinations change. But the principles, those timeless principles of wise capital allocation, you could go back 5,000 years and find them, right? In public market. I mean, in fact, the earliest records, written records, are what? They're accounting records. I mean, it's almost inconceivable. How could it be that in 2,000 years of history of the church, we didn't come across this? And what's going on with Christians most of the time, right? I mean, the Jews don't suffer from this at all. We're acting pious, frankly. I'm too good to get involved in that. Leave that to the investment committee. But what are the rates of return? They're not very good. They're unremarkable most of the time. So, well, what does the gospel say about this? And of course, it's right there in the gospel. Matthew 25, 14 through 30, right? The parable of the talents. Somebody used talents earlier. Use that exact word. What was a talent? In the modern usage, we say talent to mean any gift. In Greek, charisma. But in the historical use of the word, talent was a large sum of money. And you read this parable, the master comes to the servants, right? There's 3 servants. And it says, he entrusts them with his wealth, essentially, with his talents. And to one he gives 5 talents, and to the other he gives 2 talents, and to a third he gives 1 talent. And it says, each according to his ability. And then he says, he departed on a long journey. This is important. Remember that, on a long journey. And it says, the first servant took the 5 talents and erikisato in Greek. The word is unmistakable in the ancient Greek. He traded with them. Here it is, right here in the gospel. Right? This document, close to 2,000 years old, and it's saying he traded with them. Who's the Lord, right? Clearly, I mean, there's a lot of parables in the gospel that you could mistake them. They're esoteric, right? They're subject to some sort of hermeneutic. The parable of the talents is not one of them. And it says the second servant, he did the same thing. He took the 2 talents, and he also, traded with them. He invested them. And the third servant took his talent, and he dug a hole in the ground, and he buried it. And it says, unmistakably, because he knew the master was a hard man, who reaped where he had not sown, and gathered where he hadn't scattered seed. He was afraid. And it says, after a long time, the master returns, and he wants to settle accounts with the servants. And to the first he comes, and he says, basically, let's settle up. The guy says, Lord, here's 10 talents. I multiplied what you gave me. This is your own. And he says, good servant, you've been entrusted with a little. I'll make you master over much. Enter into the joy of your master's kingdom. And the second servant comes along. Of course, he has the same result, and he says exactly the same thing. So again, the talents according to each of his ability. But the third servant comes along and says, Master, I knew you were a harsh man, who reap where you don't sow, and gather where you haven't spread seed. And I buried the talent in the ground. And the master says, but if you knew I was a harsh man, reaping where I haven't sown, why didn't you at least invest that 1 talent with the bankers? Again, in Greek, trapezites. Right? I mean, this is a terrible, if you're a banker, you don't want to read this paragraph. Right? I said, at least the bankers, Like, couldn't you get above that level? Right? I mean, like, they're not the sharpest tools in the kit, right? So, he says, I mean, it sounds harsh, right? But take the talent from him and give it to he who has 10. Because those who have much more will be given. And to those who have a little, the little they have will be taken away. I mean, that is incredibly harsh sounding, right? By our modern standards. It's not exactly politically correct. Well, what's it really saying? I mean, is it saying we have a God to be fearful if we don't have a financial acumen? No, it's not. It's saying don't be afraid. Because faith and fear are incompatible. Now, does this manifest, is this message of the gospel, does this message of the parable of the talents, does it manifest itself in all this discussion about wise investment policy? It does, actually. If you look at the underlying thesis of a Berkshire, for example, right? What has Berkshire essentially become? The key difference between Graham and Buffett, right, was that Buffett took this idea vis-a-vis Munger, and he said, look, let's go beyond just sort of shrewdly buying these dollar bills for 50 cents, and let's find productive assets even if we pay a fair price, and we'll hold them long enough. If the horizon's long enough, it's going to be really, really profitable for us. I mean, it's going to compound over time, and that's the engine of wealth. And Buffett, of course, later says, it took him a long time to sort of get onto this idea. And if you look at that, you're saying, well, that's a wise investment policy, right? I mean, what is sort of wisdom? Wisdom is the ordering of knowledge, right? So here's a room full of really shrewd, talented value investors, right? I mean, you guys are wired in a way. Your mind is wired in a way. You're going to be able to turn a dollar bill into $2 your whole life. There's no question about it. I mean, that is really a special talent. But what do you do with it is the question. I mean, when they talk about the importance of knowledge and reading and ordering of knowledge, what's the point of that? Is it knowledge for knowledge's sake? No. It's knowledge for wisdom, right? I mean, in Greek, it's Sophia. Sort of this highest level of what you can do with your knowledge. And yet, some of the wealthiest and most successful investors, they'll say, well, what's your position on faith? I'm agnostic, they'll say. Well, what's agnostic? Agnostos, without knowledge. How is that possible? I mean, if there was a question of a transcendent God who created you out of love, but that brought you into being, that gave you a mind, you didn't give it to yourself, right? If that is the case, if it's even seemingly possibly the case, you'd want to answer that question first and foremost, right? Because that would affect everything else you chose to do with your life, including how you handled your talents. In this case, your talent being your ability to allocate capital and the great wealth you're going to create in your lifetime. So, of course, there's these different levels of being you could have, right? I mean, there's all sorts of ways human beings, apart from just being afraid to allocate their capital, there's all sorts of things you can do wrong with money. You can use it for self-gratification, right? For simple corporeal pleasures. Look, I like Porsches too. Don't get me wrong. I'm not judging anybody if they own one, especially the 911s. They're beautiful. But that in itself, and there's nothing wrong with that, right? But that in itself, it's instant gratification. It's intense. There's surface gratification, right? But it's short-lived. And what do people do in our society, right? In our Western society, and Europe is much the same way as America is, right? And we sort of have the same societal barriers here with capital. What else can we do with society? I mean, we can look at capital as a way to play an ego comparison game, right? I mean, we can look at each other and say, who has the bigger ski chalet in Stowe, Vermont, and who has the smaller one? Who flies on a helicopter to the Hamptons and who doesn't? I mean, you can get into these neurotic sort of comparisons about success, right? And it leads to a crisis. I mean, it really does. And that sort of ego gratification about success, it's more enduring, right, than simple corporeal pleasures. But it also ends. It's less pervasive than if we can look at capital allocation as being a good beyond oneself. And this is where a lot of people will get eventually. The idea of why are we allocating? And what's really the end of all this work we're doing? We have these fancy spreadsheets to do all this analysis. We spend hours reading financial statements of companies. We're reading transcripts, conference calls. Is it just to show on a sheet of paper that we outperformed a benchmark? I mean, where's it really leading to? If it's a good beyond self, if it's a good for your neighbor, that's going to be even more pervasive. That's going to be more subtle, but more enduring. But even that, I would submit, is not really the ultimate purpose of the work that we would do as stewards over this capital. And that's really what it's all about, right? I mean, you have to move intellectually from ownership. We use that word all the time, right? We own a piece of the company, we buy a whole company, to stewardship. And what's really the difference? The difference is, am I the generative source of this? Did I give it to myself? Even though, and it's easy to do, right? I mean, I do it all the time. You say, well, I work so hard. I'm so smart. I spend all the time reading. I mean, yeah, I did this. Come on. I mean, it's easy to do. But if we can make the intellectual leap from this is ownership, this is my work too, this is stewardship, to glorifying infinite God, to look beyond just the contributive factor of beyond self, to a source of those talents, a doxological activity, then it releases us intellectually even. It frees us up from this sort of white-fisted clenching on to these ideas about ownership, private ownership, self, comparison, to almost an infinite horizon. And I would say also an infinite time horizon. So this idea that faith and finance, the lines are blurred, it's totally commonsensical in my mind. The idea that by having a notion of ourselves as instruments of God, using our talents, which were given to us freely, to glorify God, frees us up not only from the crisis of being directed towards self or being directed against one another, but frees us up to love a transcendent God who brought us into being, in loving creation. That's a powerful idea. And if you're not sure of it, it at least bears questioning, right? I mean, if it's even seemingly logical that that's the case, you'd want to know. Especially since money and great wealth gives rise to what? Great power. Even if you're giving to charities, right? Even if you're giving, by the way, these charities, of course, we all know they're extraordinarily tax efficient. I mean, just look at your average charitable lead trust or charitable remainder trust. I mean, there's no question, at least in the U.S., the IRS tax code, it's very beneficial to set up charities. But what charities are you going to give to? I mean, you look at some of these charities and where the wealth is going, and you have to sort of question the wisdom of that, beyond just the tax shelter. I mean, there's underlying theses there of population control. There's a sort of a modern-day euphemism, right, for eugenics. I mean, you look at where some of these largest investors, most wealthy investors are doing with just tremendous capital base, tremendous talents they have. And then you say, there is a need more than ever for there to be a Christian voice in investing. Where are they? Why not? Let us bear witness in our faith, if we have faith, use it, bear witness, to transform the activity, which historically has been known by a separate religious group. I don't know why. It's not incompatible at all with Christianity. In fact, I think it comes to its fullest manifestation in our Christian faith, to glorify God. And in that sense, I think it unlocks the human intellect, it unlocks the human mind, not just the brain, right, but the human mind, to contemplate, even in its subconscious, the good that it would do beyond itself. And that is powerful. That will lead to an energy off the charts for what you do, when you contemplate it in that sense. So think about those things. Think about the final words of the master in that parable of the talents, Matthew 25:14-30. Good servant, you were entrusted with a little, I'll make you master over much. Enter into the joy of your kingdom. I'll tell you, otherwise, capital can be a prison. It can absolutely be an inoculation to joy. And of course, you know what joy is, right? I mean, just totally separate from pleasure. pleasure is something you pursue. Joy is something you let into your heart. You don't have to look very far on Wall Street to see how ubiquitous drug use is, to see how ubiquitous suicides are. I was just reading a book about the SAC debacle. It's called Black Edge. If there's any doubt at all about the risks of looking at money strictly from this sort of lower level of being, strictly from this level of putting ourselves up and the commensurate activity it creates, read that book for a recent example. But that's sort of my thinking. But keep those words in mind from the parable of the talents. I don't want to hijack this whole speech. I want to leave it open for some Q&A for a little while, but I'm happy to answer any questions on this sort of Christian philosophy of investment, or any question you want about portfolio management or securities, whatever. I'm equally happy to talk about that, certainly. It really was a great honor to come here today, by the way, and just speak with you a little about these things. I know it's a little different than the presentations you've been getting, but thank you for letting me speak with you. Yes.
What's your perspective on the defense industry?
Well, that's a great question. So a lot of people come to me and they say, Father, I'm so glad you have a Christian philosophy of investment, because that means you do ethical investing and you avoid things like companies make ammunition. And it's actually not usually what I'm talking about. To me, that's so self-evident. If you really want to play it safe, you could just avoid like casino stocks or tobacco companies or something like that, where there's a social harm. But usually that's not what I'm talking about, because I think any socially minded person would probably have the same opinion. It's sort of like a no-brainer in my mind. Usually what I'm talking about is using our talents and putting it to work in the context of the gospel. But in terms of defense stocks, are there legitimate forms of self-defense, a need for war? There certainly are. Certainly. I don't think for a second it'd be appropriate for me to be involved in that, but I wouldn't fault or judge somebody for doing it. In fact, actually, I should say, in 2010, we did buy defense stocks. We bought a small company called Force Protection. When Obama had talked about drawing down troops in Iraq and Afghanistan, that company's stock just cratered. But for a careful analyst looking at that company, you could see the company had Department of Defense contracts. They were worth more than the market cap of the entire company, and they were non-cancelable. And the DoD, of course, was like a blessing on the accounting, so you could just circumvent the due diligence on the review of the financial statements. Now, that company made MRAP vehicles, which are mine-resistant vehicles. So it was purely defensive. They didn't make ammunition, they didn't make guns. It was still in the defense sector, but they were saving lives. So that was an okay investment in my mind. And then, we were proven right in a huge sort of way. I don't know, we paid under $4 a share for it. And I said, well, probably General Dynamics was going to buy them out because of the value of these contracts. Nobody was really watching it. And it was a sort of arbitrage. It was really just time arbitrage. And we were right. Yeah.
What's your position on Heidegger's theory about the coexistence of Protestantism and capitalism? With the Huguenots, etc., this coincidence that the emerge of the capitalism 200 years ago and the distribution of the Huguenots within Europe, and why the Protestants had, especially the Calvinists, have a totally different attitude to capital compared to the old style Catholics.
Yeah. Well, generally speaking, we're in a world that's in flux, right? So we've got Europe and we've got the United States, and we have this movement towards a Western way of thinking, and that sort of ends with the Bosphorus in Turkey, right? And then you've got this Oriental or Eastern way of thinking, and there's a lot of criticism of capitalism because capitalism can go all wrong. There's no question. You can see all these abuses on Wall Street, but capitalism is probably the best expression of human freedom we have. What are the alternatives? So the first thing God imbues His creation with in Genesis, right? What's the first thing He sort of makes man for? He makes him built for freedom, right? Human beings have this innate desire to be free. Why? What does the story of Genesis teach us? That God made man to do what? To love Him. Can you love and without freedom? I don't think so. You can't say I'm being forced to do this. I have all these limits and boundaries that are set on me, but I still love this. It just doesn't work, right? You just ask any people in a bad relationship where there's a controlling partner or something. They're going to be unhappy. So there's this idea that freedom is prerequisite to love. So human beings are wired for freedom. There's just no question. Capitalism gives us that freedom. What are the alternatives? You look around the world. Look at socialist systems, and you look at communism. What's the product? You know a tree by its fruit, right? So yes, there's going to be abuses in capitalism. Of course there are, but you're going to have tremendous abuses in anything else. And I don't think there's anything about capitalism that's unchristian. I think, so much what I said earlier, it's just a matter of perspective. If you keep that in the context, a doxological, we say, I'm not the generative source of this, right? I mean, you didn't give yourself life, right? You didn't choose to be born. Well, we didn't choose to be born in wealthy countries either. I mean, you didn't choose to be born in Germany or in the United States or in this country. We have all these tremendous resources that, you know, you wouldn't have if you were born in Somalia or something. You know, you're given these gifts, these talents. You know, we need to use them, but we need to use them in context. And when we see that as ourselves being a conduit to glorify a transcendent God of love, I'll tell you, anxiety goes down, neurosis goes down, suicide evaporates, drug abuse and alcohol abuse disappear. You know, there's a sense of consolation instead of anxiety. And, you know, those things are really super important if you're going to be around the potential evils of money, which in the investing world, I mean, especially with the ability to make such great wealth. I mean, like I said, you guys in this room, you're a special group. I mean, your brains are wired differently. You walk outside this room, you go on the street, people's brains aren't wired that way. I mean, they're going to have a higher cost of capital than return on capital. They're going to be thinking as wage earners for a longer. You guys are thinking at a whole different level. And you've been given tremendous, tremendous talents. All I'm saying is just think about the greatest good you can do with it. Just think about that perspective. If you have faith, don't say to yourself, you know, I'm in church on Sunday, and I'm back at my screen on Monday looking at the markets, and they're incompatible. I need to keep them separate. They're not like oil and water. They're not incompatible. There's no work that you can't elevate to the level of glorifying God. Yeah.
How do you think about different securities like short selling and sort of like, from your perspective, how would it integrate into a Christian view?
Yeah, I think that's a great question. Well, you know, in this respect, I definitely depart from Buffett, who in his early career at the Buffett Partnership did do some shorting, but generally doesn't. And for sound reasons, right? I mean, it's not advantageous from a tax perspective. So if you're a fiduciary running a fund, you're always going to think about taxes as your largest P&L line item, so you do want to minimize that. There's obviously the problem of, you know, unlimited liability. The stocks could be called back. There could be some sort of wild, you know, acquisition or something. But I don't adhere to that at all. I think that if you're in a really expensive market, you know, if you look at a market, you say, look, this thing's a bubble, right? I mean, it's fueled by low interest rates. It's been going on like 8 or 9 years of a bull market now. And you're really serious about using your talents and protecting the interests of your investors. I think you have to look at shorting. I mean, we certainly gained a tremendous amount of notability in the last 3 years from shorting. I mean, it sounds incredibly arrogant. We haven't been wrong on a short yet. And so we've been very accurate on our shorting. Personally, I hate shorting because of the unlimited liability. But there's nothing ethically wrong with shorting, right? So historically, people look at short sellers and say, well, this person's not patriotic, or they don't want America to succeed, or Germany, or wherever, because they're betting against the company. But actually, I mean, as everyone usually knows, the short sellers are usually doing some of the best analysis out there, right? Because of their liability. And they've got a lot on the line. I mean, if they're not usually collecting dividend, if the company's paying dividend, they're paying it. So, I mean, you have to have a lot of conviction to short. But, you know, if you look around in the market, there's a dearth of good investment ideas, which I think for the serious analyst, if you're really focused on sort of traditional Gramanian deep value, what are you doing after 8 or 9 years of markets rising? I mean, you look at these P/E ratio. I mean, it's hard to defend a Tesla, frankly. I mean, they may wind up to be the greatest company in history, but it's fairly early in their history. And there's a lack of profitability. I mean, we're short Domino's Pizza, for example. If you read our 2016 annual report, I hope that's a good laugh. I hope I'm not here next year, you know, giving a mea culpa because Domino's is like $250 a share. But if you look what's happening, I mean, it's really emblematic of sort of a corporate governance failure, right? I mean, everything that you would think constitutes wisdom in corporate governance or fiduciary responsibility or stewardship over capital is like not being done at Domino's. So, you know, they've got the top executives' pay tied to share price and not the creation of enduring tangible shareholder value. So you've got a company with a negative shareholder equity fueled purely by debt. So you've got common shareholders buying the common stock. I mean, they're really like bondholders, right? But they don't have any protection of the bondholder. So you're getting something like minus $43 a share in book value. You're paying almost $200 for it. Anemic earnings growth, enormous debt. You know, I mean, the current CEO, Doyle, just came in. He just, again, like so many others, ratcheted up the debt with cheap money. I mean, every bubble sort of works the same way, right? I mean, they're all predicated on cheap, easy lending. I mean, whether it's the housing bubble or the dot-com bubble, you know, the tulip bubble, the 16th century. I mean, they all work sort of the same way, but they never can last forever. So you look at that and say, well, you know, that's probably a better investment idea than the longs I can find right now. So I think in a market like the one where I personally think is pretty expensive right now, I think it's okay to short. You know, and that's not our only short. I mean, we're shorting other companies as well. But if it was different times, I mean, there were reasons for it. If it was 2010, you know, we wouldn't have been short anything. So, yeah.
How do you think about high cost credit? So to me, there seems to be almost like a cultural difference in Germany.
Yeah.
You know, if there's a 5% mortgage, that's almost where people say, oh my God. And here you have payday, you have, you know, other high cost credit solutions. And in the same context, we all are in the game of outsized returns, so it seems for us perfectly fine to achieve a 20% CAGR as a fund manager.
Yeah.
But if there's a company that hands out loans at 20%, we look at them like, oh, how can you invest in it? How do you think about it?
Yeah, if I understand your question, I mean, I think, there's a beautiful saying from Scripture that the borrower is the slave of the lender. I mean, just show me an example in history where someone took on copious amounts of debt and then ultimately become really like an indentured servant of the lender. There's definitely cultural differences between Germany and the United States, no question. If you're a shrewd investor and you know how to get 20% CAGR on your capital, yeah, you could borrow at 5%. I mean, right now we're fortunate. I mean, most fund managers in America borrow for 1%, something like that. The average consumer can't. I mean, if you look at the people who are sort of almost always on the other side of the table, right? I mean, their cost of capital is way higher than their return on capital. So they've got a credit card with a 12% APR. They've got a car loan at 6 or 7%. They've got a mortgage at 4 or 5%, and their money is, safely in the bank at 0.5%. But for people in this room, I mean, it's the opposite, right? I mean, your cost of capital is always lower than your return on capital, and that's sort of the difference between the person who thinks as a steward over capital versus the wage earner. And I mean, in America, that's gotten out of hand, payday lending and so forth, if that's what you're talking about. There's no question. I mean, it's become predatory very often with payday loans. I mean, those interest rates are far above 5%. I mean, they're annualizing sometimes to 200% or something like that. So there should be regulations on that.
Would you draw a line at a certain degree? So is it a question of degree or a question of principle?
Well, I think those sorts of companies, it's a principal issue. I wouldn't touch them, other than to short them. If you're talking about payday lenders and so forth, like Easy Corp or something like that, they're pretty widespread in this area. They're preying on people who don't know any better.
Preying in what sense?
Well, if a person is strapped for cash and you tell them, I'll cash your check for you and the next paycheck will come to me and I'll take a cut, and they can't do the simple calculus to figure out what that annualizes to, that's not a good business. I mean, why would you want to do that? I mean, somebody made a comment earlier about wealth growing in the world. I have a little different view. I see a disparity of wealth in the world. There's going to be 7 billion people pretty soon. The concentration of wealth is probably the greatest in history. I mean, we have pharaohs nowadays, let's be honest. I mean, if you look at some of these Oxfam reports, you've got a very small segment of the world's population controlling an inordinate amount of the world's resources, like more than 50%.
They're all in Omaha now.
Yeah, most of them probably, yeah. But that's not good for society. I'm not advocating wealth redistribution or anything, but that's going to create problems. I mean, Bill Gates said a few years ago, I think it was at Davos, he said, pretty soon, poverty will be eliminated in the world. I mean, well, let's just do Bill Gates versus Jesus Christ. And what does Jesus say in the gospel? He says, the poor you'll always have with you. Who's right? Who's wrong? I mean, they can't both be right? I mean, either the poor are always going to be with us or we're going to solve poverty. I don't think we're going to solve poverty, but I'll tell you something. That's where charity comes in. I mean, for the ancient Greeks, they had 4 words for love. They had storge, which was like simple affection. That's kind of commensurate with the lowest level of being, like trading, like instant gratification. They had philia, like friendship. Like we see that word in English, like philosophy, like anything with a phi is friendship. They had eros, which was erotic love, right? That's sort of beyond the self to the other. Contributive, right? We see good words like erotic from that. And they had agape, or charity, the love of God. That sort of infinite source of love, which we reflect to the others. The act of giving to the poor, extraordinarily important. I mean, if you want to look to the gospel and just look to the parable of Lazarus, the poor man. I mean, you can't ignore poverty in the world. It's there, and I'm not convinced it's getting less. I think the imbalance is, maybe statistically we have more wealthy people today, but look at the population of the world has doubled in like 100 years. And that imbalance is tremendous. So we have to be very cognizant of that. And I think, like I said, you guys are in a really, really unique and important situation because of your skill set and your talents. And if you can get to charity, and it's okay if you fall back down again. That's okay. I mean, really, all these levels of happiness are okay. I mean, it's okay to have simple pleasures. It's okay to have a role. It's okay to have whatever. It's okay to want to use your success for a loved one or family. That's all okay, as long as it's kept in perspective, with the ultimate being charity. And I think if that notion of a transcendent God that created you out of love, if that's first and foremost, as manifest in the person of Jesus Christ, right? In the gospel of Jesus Christ, it's all right there. Read it. If you can get it in that kind of, just get back up to that level as soon as possible. because that's going to free you, and it's going to free your talent to do tremendous things. I mean, it's going to unlock your mind to do tremendous things. The second it gets to that level, you're going to be more productive. Your horizons are going to be greater. Your time horizon will be significant. I mean, it's just going to change everything. So that's my thought. Get back to that level as soon as possible. Yes?
Maybe on that note, what's your take on passing on of wealth, inheritance of wealth?
Well, it's risky, for sure. I mean, that's the European model, right? I mean, it's a little bit more foreign in America. So the idea of dynastic wealth that's handed down, and it's easy to do in Europe in most countries, right? Like, you look at Switzerland, for example. I mean, there's no capital gains tax. There's no inheritance tax. I mean, we're getting pinged in the U.S. with a 50% inheritance tax. Now, we can work around that sometimes. Very often we can, especially if we have great means. But there's really great risk, I think. You know, I mean, in America, we have this different view that everyone should pull themselves up by their bootstraps. I think there's probably something to that. I mean, when you hand down wealth generation after generation, I mean, you can just see, let's study the Rockefellers, right? I mean, you've got John D. Rockefeller, and then he did amazing things. And then you got John D. Rockefeller Jr., he became a great philanthropist, and it kind of just degrades from there. And it's really because of John D. Rockefeller, right, that we created this inheritance tax, because wealth is just being handed down dynastically. That's not really taken hold in a lot of European countries. I'm not sure that's an advantage. I tend to think it's a disadvantage. I mean, I don't think showering children with tremendous financial resources is in any way beneficial to their soul. I mean, they're not going to have any concept of value, right? So that's my thought. Anyone else? Any question at all?
One
Yes.
question. If you think you're a good compounder, what is more, what is the best thing to then give a 10th every year?
That's such a
or
good question.
keep it
Yeah.
like Buffett, basically till you die, and then hand over 99%?
Well, I don't have a super strong opinion, but I think it's okay to not do it. If you're a great compounder and you really do have charity in mind, I think that's okay to hold off. I mean, if you're going to do 20% per annum, CAGR, I think you're okay. I mean, you can make an exception in the gospel on that. Now, I don't have a strong opinion on it, because it's also nice to see the good you can do in your lifetime, and you don't know how much time you have, right? I mean, our most valuable commodity is time. We all think we're going to live to be old, but that's not always the case. Nobody knows how much time they have. So, you know, I don't know. I mean, pray over it. I mean, just on a per call basis, something comes to you and you're going to do some good to help someone, give it to them. I mean, if nothing comes up, keep compounding your capital and create a master plan like Buffett. But, you know, I don't mean to criticize him, but, you know, you can look at Buffett and Gates' plans. There's some real scary underlying themes there. And you know, again, I'm not criticizing you. There's really almost nobody more experienced and more wise in the area of investing than Buffett. But I do get a little concerned when that spills over into giving personal advice, which he's often done. So he'll go to university and talk to young people about, you know, how do you define love and so on. And that almost universally goes against every traditional definition of love and every major world religion. So I mean, there's boundaries, right? So that's where it's really incumbent upon us as Christians to have a voice, right? Because if everyone at the top is agnostos, agnostic, I mean, literally no knowledge, well then somebody's got to propose something, you know? And I think Christianity is the greatest set of answers to the greatest number of questions, right? Yeah.
Do you think that this agnostic thing is about taking a position on abortion and so on, is that to protect their personal wealth and their business, because maybe they have customers who get upset if they take a position?
You know, probably. I mean, again, I'm really fear judging. I don't mean to judge, but it seems to me in the particular case of Buffett, there is truly a fear of negative blowback. He really wants everyone to like him. I mean, he doesn't want bad media. He's done an extraordinary job at keeping it positive. I mean, he's done some things that if anyone else had done it, you know, the media would just come raining down on him. So I think that's well orchestrated. I think a fear of what other people are going to say about you, you've got to dispense with that. Who cares, honestly? Take a position. You've got wealth, you've got talents, take a position. Don't worry about what the media is going to say. I mean, really, the media is totally corrupt, at least in America. I won't speak for Germany. But, you know, we've got an epidemic in America of fake and distorted news. You don't want the media to be the voice leading our young people to the type of person they're going to become. You just don't want that. I would also add that, you know, if you look at the construction of the Gates and Buffett philanthropies, I mean, these are clearly charitable trusts and foundations that are set up to avoid taxes. I mean, there's no question. Now, that's okay to structure it that way if, in the end, the net compounding effect is a greater good you can do beyond yourself. But really, I mean, can we say because Gates was a great technologist, and he was a brilliant technologist, right? I mean, but is that a moral voice? I don't know. I'm not convinced, you know. I mean, Buffett is an amazing investor. I mean, he had some benefits, though, right? I mean, his father was a U.S. senator. When the Graham-Newman Corporation shut down, you know, investor money. I mean, there were some advantages that got him started. but I think we need to have the humility to say, where are our limits? Where do we stop? Or where can we say we shouldn't be commenting on this issue? So I think it's awfully weird if someone goes that long without any negative media coverage. I think it's an underlying desire to be liked, frankly. And I don't attach much value to that. I mean, if you look at the greatest figures in history, right, who really changed the course of history, I mean, they're not really liked at the time, right? I mean, Socrates gets what? Poisoned. Gandhi gets killed by what? A Hindu of all people. Christ is crucified by the high priests. I mean, these are the people who changed history. Martin Luther King is shot. I mean, if these people were worried about making everyone happy, they wouldn't have altered the course of history, right? I mean, yeah.
You said there are some scary underlying messages with Buffett and Charlie Munger.
Yeah.
Can you?
Well, I was thinking more about the Gates Foundation, frankly, when I said that. But these ideas about birth control, and if you look at how they wind up manifesting themselves and abortion, I mean, if you look at who were the people who started these movements, these are movements directed towards minority groups, usually around the world, and the effect is really population control. And in my mind, that's a euphemism for eugenics. I mean, we should all be very scared by that. If you believe that every human being is created in the image and likeness of God, with the dignity of God, there's a problem if you want to control something. I mean, the human person's ability to participate in the creative act, right, is the most powerful thing they'll ever have. I mean, there's no question about it, right? I mean, the sort of sexual component in a human being is the moment at which they have agency in God's creation. It's extraordinary, right? You're creating new life. I mean, or better yet, you're an agent in the creation of God's creative act. And that's the first thing God does according to the scripture, right? Holy Spirit, first thing he did, he creates the world, right? He's creative. He's a creative God. And he creates out of love. And so we have this definition of marriage and the bringing up of children, which is ancient. Now, it's in the last 30 or 40 years, it's been turned upside down completely. And we act as if there isn't this, thousands of years of cultural tradition. But that's so powerful. When we start to interfere with that, what are we doing? We're sort of playing God. And I think that's the risk of attributing our talents to ourselves. I think if you're going to say, look, I'm so smart, I've done so much, I've got so much capital, I can weigh in on this and affect it, that's very, very risky. Where's the humility in that? But if there's a faith in God, I mean, if you have faith, use it, like I said. If you come and you approach philanthropy and you approach charity with the sense of the sort of, in Greek, it's organos, in English, it's as a conduit of God's love, you're not going to make those mistakes. You're going to see each person as individually and uniquely created in the image and likeness of a loving God. And the idea that you are here to control that will be abhorrent completely. So, but if you're not grounding those, I mean, where would the Gates have done it, right? I mean, you can't spend decades building Microsoft and say, oh, by the way, I've given a lot of thought to this moral issue, and I think I'll just weigh in with my 70 billion wealth on it. So that's where it's incumbent upon you guys, because you're the future. I mean, several of you guys in this room are going to get to that level, or very, very close to it. And, you're going to have a chance to say something different. I mean, like I said earlier, how could it be? You talk about knowledge. How could you be agnostic? I mean, if it's even seemingly a possibility that there's a loving God that brought you into creation, that should be like question number one. And if it is, that has an implication on every action you take after that point. So, and again, the power you hold in is uniquely powerful. I mean, I knew that when I was reading Ben Graham's, I said, whoa, this is hugely powerful. Why aren't Christians talking about this? If you're wired to buy dollar bills for 50 cents, you're going to compound at a high rate of capital. You're going to get very wealthy. I hope that answered the question. Anything else? No? Going once, going twice. I'm so honored to come speak with you. Thank you. Oh yeah, one more. Sorry.
So you acquired 10% stake in Geospace.
Oh yeah.
And Charlotte was TGS Lopec. So
I'm sorry, what's the second part?
TGS Lopec, which is the seismic gear on the water. So it's a seismic company for offshore.
That's right.
How do you approach activists? I mean, how do you approach management, and how do you talk with them? What's kind of your relation with them?
Yeah, that's a good question. So in the last couple of years, I haven't always had friendly relationships with management teams that usually come through shorted. It's not a very big fund, but somehow we've been able to affect change in a couple of publicly traded companies. We were able to bring about a buyback at Silicon Soap Industries in Singapore. We really, I think, brought about the changes at WWE in 2014, which were productive for shareholders. In the case of Geospace, somebody used the word integrity earlier for management. I think it was Tom again. You have a wildly honest management team, a company with a long operating history. There's not a company-specific problem there. There is an industry-wide problem, but it's not secular. I mean, I don't believe for a second that everyone's going to own a Tesla next year and demand for oil and gas will simply go down. I mean, there was a massive overproduction issue. Now, I talked about the fake and distorted media epidemic in America. That's really a problem for personal reputations. I mean, if the media goes around doing hit jobs on people, that's really unethical. But if they're going to do it to companies, use it to your advantage. I mean, if they're going to distort everything that comes out about a company, and a vast number of investors are going to follow that, and you're inclined to think independently, right, which is probably one of the most important attributes you can have as a value investor, is the ability to sort of think apart from the group. I mean, there's very few people like that, right? I mean, it's almost like, it's not like a normal human thing to think independently. I mean, most people want to be in the group. But if you find that somehow in your life, this part of your mind is wired such that you don't care what anyone else thinks, you're not moved at all by what the media says, you don't care about being in a group, like, fish school and swimming schools of fish, and, lambs and goats and cows like to be in herds. But if that's not you, I mean, you've got a huge advantage. So in the case of geospace, we looked at the E&P sector, and we said, well, they all levered up during the bubble, right, during the shale boom. I mean, they just, egregious debt. And they're all in trouble. I mean, CGG's in trouble, Ion Geophysical's in trouble. You look at those balance sheets, well, that's scary. I mean, they're going to have to dilute the shareholders, they have to go Chapter 11, something like that. And then here's geospace that, massive cash, tons of liquidity, honest management team, long operating history, and you're buying tangible assets. Really, by January 2016, we were buying them for like 25 cents on the dollar. So, I mean, the thesis was so simple. I mean, you don't have to know where the price of oil and gas is going to go tomorrow or next year. You just know that this company has enough runway that this is a finite commodity. It's not like gold. You don't dig it up out of the ground and bury it somewhere else in the ground, or in the basement of a Swiss bank or something. You take it and you burn it, and it turns into gas. And so, and demand was always rising. So you look at it and say, well, $1 trillion has been taken out of capex in 3 years. If even a part of that comes back, like $250 billion in the next 2 or 3 years, and these guys are, clearly going to be like the last guy standing. They're going to participate in that. So again, it was a total no-brainer. I mean, just deep value again. And that's really different than, the modus operandi for most value investors is free cash flow investing, right? I mean, they want to see a history of free cash flow and the current healthy free. So deep values in special situations, they're really not for everyone. I mean, but if you know what you're doing, I think the rates of return there are even higher. So we said for 2 years, incredibly, we said, look, it could take 2 years before we show a return, but we're going to try and get 10% of this company, and then we finally got it. So not adversarial relationship with the management team at all. I go down there, we talk. I mean, I've learned so much about geology, and Rick Wheeler, the CEO, is really a scientist, which I think is the right thing for the CEO of that company, because they're producing a better mousetrap. I mean, there's no question in my mind, their geophones are the superior product. When I see a board of directors filled with hedge fund managers or finance guys in the management, I get a little worried, to tell you the truth. Like in the pharmaceutical industry, I mean, the entire pharmaceutical industry has been bastardized, frankly. I mean, these sort of new wave of pharmaceutical companies that their ranks of their boards are hedge fund managers. I mean, they're just, every manipulation of a financial state you can think of, they've done. It's scary stuff, but that's not what's going on here. If you don't have a secular decline, you've got massive, and by the way, the write-downs on that inventory is completely according to GAAP, but those aren't real write-downs. The obsolescence they're recording is way too aggressive. So you look and say there's $17 or $18 in tangible book. It's probably more like 22 in tangible book. So you've got tremendous safety there. I hope that answers the question. Yeah. Any other questions? You must have, did you read the annual report, the 2016 annual?
I read that 3 years ago.
Oh, 3 years ago. Okay.
But also 4 points.
Yeah. Anyone else? Okay, again, thank you so much. I hope I didn't take too much time. This is probably the last time I get invited, and so.